Hey everybody, it's Brian here from AlphaTrends.net. Today is Friday, the 15th of July, 2016. Let's look at this market. We had a good week, nice follow through to the recent strength, and the S&P finished with a gain of 1.5%. The Russell 2000, 2.5%. Semis almost 3%. And the loser this week was the bonds. So let's take a look and see where we are. We're at all-time highs on a weekly closing basis here for the S&P 500. The market broke out, and I got a lot of people telling me that last week that the market was going to be down this week. But again, the path of least resistance is higher. Why make things difficult on yourself by shorting a market that's in an uptrend? If we look at the 5-day moving average here, you can see we've been riding that rising 5-day moving average. And for the week, we can see that the volume weighted average price this week came in right where that 5-day moving average currently is. So next week, we're going to be looking at this market still as, it's getting a little bit extended, but markets don't have to correct by price. They can correct sideways through time as well. And I had posted on StockTwits a chart this week that indicated the measured move from point A to point B here. That point A right down here at 199 to 210 is 11 points, and you add 11 points to the 207 down here, gives us an upward objective of 218. That's not a hard and fast level that you would just look to sell at. Instead, you would say, as long as the intermediate term trend remains higher, that seems like a reasonable place for this market to go. So next week, I think that, the important level will probably be about 214.5, because if we were to get down below that, that would bring us below the 5-day moving average. And then if we were to see a move like this, it could then lead to a price correction. But for right now, going into next week, it is still innocent until proven guilty. We closed again on a weekly basis and monthly basis. We closed on all-time highs here. So it's tough to be bearish when the market is doing that. But the market seems to somehow find a supply at certain times that are unexpected. So we have to be aware of the possibility and the important levels that it needs to hold. If we begin to correct, then at that point, when the market tells us, that's when you can get your intermediate term, short term trades on the short side for a possible pullback down towards 211. But the longer term trend is still obviously decidedly bullish here. The NASDAQ also finished with a nice gain this week, and it's not at all-time highs as we can see, but pretty coming up close to it here on the weekly time frame. You can see that we did break beyond that level that was anticipated as resistance. So this prior high here, and now that's going to become our important level of support next week. If we pull back down into that zone, then we would be looking for the possibility of support down in here. That would bring that 10-day moving average up as well. But resistance broken tends to act as support, and we've still got a beautiful uptrend here above the rising 5-day moving average. And if we take a look at the week-to-date volume-weighted average price, that is, for the last 5 days, you can see we closed above that as well, and we're still bullish in these markets. The Russell 2000, was the group this week that finished with a larger gain, 2.5%, and same thing here. We've got a nice looking trend on the longer term time frame. If we take a look at this prior peak, it did not offer any real resistance, not yet at least. We see that the market has slowed down in this area, but again, we're digesting gains through through time correction rather than price, and I think that 119 is going to be the important level next week. If we break below that, then perhaps we see a little bit deeper pullback. But for right now, again, we are still in an uptrend here, and to try to pick the top is basically foolish. The semiconductors finished at a closing high, I believe, on the weekly basis here. We had this action back here that we could close pretty much right on, actually. The all-time high is $60.13, and we are obviously within striking distance on that. It seemed coming into this week that maybe this market didn't have the same potential for bigger upside, but it certainly followed through that way. And looking again at that 15-minute time frame, I think that next week, early in the week, we'll see that 59ish is going to be the important level that we want to see hold up. The biotechs added a little bit here this week as well. Let's take a look at what that number was once again. It added 0.5% to add to that what's now a 5.9% gain for the month. And as we've noted, we are currently, we're holding right at and above that yearly volume weighted average price, and we're within a bigger range here. Obviously, that this is the the band of resistance, and down here has been the band of support, and we're pretty much right in the middle of it. I think that it's going to be important for this market in its recovery process to hold above that 50-day moving average. If it can do that, then perhaps we see that it does run back up towards the high end of the range here. The bonds, as noted, were the bigger loser this week. They have obviously had this big run, so some pullback is not uncommon or shouldn't be a surprise at all. Excuse me, but the weekly time frame here, you can see we're still above that 10, 20, 30, 40 week moving average, and they're all rising. So we look at this as a pullback within an uptrend. It's not, there's no evidence that this is the top. It might end up being that way, but for now, it's simply a pullback in an uptrend. Hope you guys had a good week of trading, and I'll talk to you next week. Thanks.